G'day folks, welcome back to Pete's Investing. It's March 13, 2024. This is the silver analysis. Now we're in a bullish trend, but just be careful, we're in a retrace at the moment with a possible break to the downside, and the divergence, the bearish divergence has been hit. We'll also cover a trading idea and talk a bit more about the tops and bottom indicator I've introduced recently, as well as the CCI 150 moving average bands. So what I've got here, for those new to the channel, with the weekly, the daily and the hourly, and we trade, when we're trading in the hourly time frame or the lower time frames, we always go with the trend of the weekly and the daily trends. You can trade on the higher time frames like the daily, in which case we'll follow the monthly and weekly trends as well. So here we can see, first off, on the ADX 25, it's bullish on the weekly, bullish on the daily, and it's broken out with a fresh bearish outlook on the hourly. Secondly, we've got another trend indicator here, is the CCI 150. When it breaks above this moving average band, that's considered a bullish mode. On the weekly it's bullish. On the daily you can see that it was bullish and it's broken down into that band, in which case we don't take any long or short trades until it clears this band of moving averages. And what we look at here at the moment, you can see on the weekly it's actually stuck in this range for some, or actually many months now. Hasn't really made much movement. On the daily, we've also hit this minor resistance area at 2460, and it's actually making a break to the downside. So the question is, how far down will it go? And if I draw a Fibonacci retracement from that low to that high, you can see there it's actually penetrated the 23%, which is always our key area to look out for in terms of a divergence. Now there was no divergence on the daily, but if we go to the hourly time frame, there's that same range, and there's that bearish divergence on the CCI versus higher highs on the price. And if I draw the Fibonacci range between that low to that high, you can see that's the 23-38% target area, which has been hit and is currently resting around a 23% retracement. Now if the price drops much further and breaks below the 61%, that's going to be very bearish for silver. At the moment it's sitting quite fairly comfortably after that little retrace. It could always bounce off any one of those Fibonacci levels down to the 61% and can bounce from there. But of course, if it does break much lower than the 61, as I said, we're going to look more bearish at it. But at the moment, it's a bit early to talk about that. We'll see how it goes. That's on the hourly. So I'll go now to, or we'll say while we're here, we do identify on the hourly time frame again, we do identify these red and blue arrows, which help identify tops and bottoms. You can see that they don't always pick the absolute tops or the bottoms, but they do pick little retraces at least. So these are little retraces to the upside, and likewise on the red arrows indicating retraces to the downside. What I look for is when it's continuous red arrows in this case, I use it in conjunction with a divergence, and that helps me identify a pullback down towards the direction of that divergence. There was a bullish divergence back here, higher lows on the CCI versus lower lows on the price, and the price bounced up there as well. And if I was going to draw a target on that one, you can trade these divergences, but I generally use them as a spot to get out of. Just delete that to exit the trade if I'm in profit. I use it in that range, so between the 38% down to the 23%. You can see there it hit it. In this case, it went well beyond 100% level retracement. So now I'll go back to, also by the way, these indicators which help identify tops and bottoms, plus also these moving average bands on the CCI are in the description below for those videos to reference should you wish to do so. So what we've got here is a trading idea with the daily, and this is from the previous charts I showed you with the monthly and weekly. So when the daily and the weekly are both bullish, in this case the daily is bullish and it's currently broken out into that moving average band, so we don't take any trades at the moment. But back here, had you taken those long trades, I've got a back test here on going long on the hourly average down approach and the hourly stop loss approach. And I've got the rules for these at the end of the video, stay tuned. But basically the first major rule is when the CCI breaks above the moving average band and the weekly is also in the same bullish mode, you take long positions and go short when the weekly and the daily are below the moving average bands. In this case, we're demonstrating going long on the hourly time frames based on the daily breaking above that. So had you entered the first trades at that point there, which happens to be the 1st of March, you would have taken those long trades, and you would have stopped taking trades right at the very end before that started declining. So you can see there up until this point, the average down approach has generated just about $3,500, and the stop loss approach has generated $215. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.